Welcome back to our weekly market wrap-up. Domestic equity benchmarks posted modest gains this week, supported by strong corporate earnings in the first half. However, geopolitical tensions, especially after a terrorist attack in Kashmir, dampened sentiment in the latter half. So, stay tuned, and by the end of this video, we'll unpack the key drivers behind these movements and what lies ahead. This week, Sensex rose by 0.8%, and Nifty 50 gained 0.8%. The mid-cap index increased by 1.3%, while the small-cap index rose 0.1%. These movements reflect the positive momentum from strong corporate earnings, partially offset by geopolitical tensions. Let's take a look at this week's key economic updates. India's core industries grew by 3.8% in March 2025, up from 3.4% in February, driven by cement, fertilizers, steel, electricity, coal, and refinery products. For FY25, core sector growth slowed to 4.4% compared to 7.6% in FY24. The IMF lowered India's FY26 GDP growth forecast to 6.2% from 6.5%, citing global trade tensions and the new 26% US tariff on Indian imports. Meanwhile, HSBC flash PMI indicators rose, with manufacturing PMI at 58.4 and services PMI at 59.1 in April 2025, signaling robust sector growth. The World Bank also downgraded India's growth forecast for FY25 to 6.3% amid rising global uncertainty. Globally, the People's Bank of China kept interest rates unchanged, maintaining the one-year loan prime rate at 3.1% and the 5-year at 3.6%. China showed willingness to engage in US trade talks but rejected negotiations under tariff threats, adding cautious optimism to global markets. Meanwhile, a leading brokerage downgraded the global growth forecast to 2.8% for 2025, citing concerns over US trade policies and uncertainty in China, Japan, and emerging markets. Among the top gainers this week, Tech Mahindra Limited surged 11.8% after Q4 net profit and revenue beat forecaster estimates. HCL Technologies Limited gained 9.7% on strong Q4 FY25 results and the announcement of an upcoming ₹18 per share dividend. Mahindra and Mahindra Limited, M&M, rose 6.9%, supported by expectations of a normal monsoon season. On the downside, among the losers, we had Shriram Finance Limited, fell 5.2% due to rising finance costs and margin compression. Adani Ports and Special Economic Zone Limited declined 5.2% amid concerns over the $2.5 billion Australian deal and profit booking. Bharti Airtel Limited dropped 3.8% due to bearish technical indicators despite strong quarterly numbers. In the unlisted space, Vikram Solar secured a 150 MW solar module supply contract from Maharashtra Power Company NSE, announced a 1 crore donation to support the families of victims of the Pahalgam terror attack. Meanwhile, Gensol and BlueSmart are under simultaneous investigations by the Enforcement Directorate related to a money laundering probe. Other high-interest, unlisted companies include MSCI, NSE, Apollo Green Energy, Farm-Easy, CSK, NSDL, and Tata Capital. That wraps up this week's market highlights. Here's what to watch in the week ahead. Next week, market sentiment is expected to remain cautious due to ongoing geopolitical tensions between India and Pakistan. Investor sentiment may stay fragile, with profit booking likely after the recent rally. Q4 FY25 earnings will continue to influence market direction, along with geopolitical developments. Key data to watch includes India's industrial production data for March, to be released on Monday, the 28th of April 2025. HSBC India Manufacturing PMI final for April, expected on Friday, the 2nd of May 2025. US job openings, JOLTS, data for March on the 29th of April, China's NBS and Cash-in Manufacturing PMI data on the 30th of April. US Core PCE Price Index for March, Bank of Japan's rate decision on the 1st of May, and Japan's Consumer Confidence Report. That's all for today. Subscribe to Ticona Capital for more insights and wealth-building opportunities from the themes of the decade. Visit us at ticonacapital.smallcase.com to explore thematic investments in the Amrit Kaal. Don't forget to like, comment and share. See you next week.